You cannot go anywhere without somebody giving you advice about Forex. You don't know if they are telling you good information or just what they might have picked up on from unknown sources. If you want real information and want to be your own expert on the subject, this video is for you. Take note of interesting market information. Make sure you put these in a reference notebook to look back on for ideas. This can help you organize your strategy by keeping track of when markets open, the pricing ranges, the fills, the stop orders, and anything else that you notice that may aid you in your trading endeavors. If you are a beginner in the Forex trading business, it is important that you find a broker that suits you just right. If you do not find a broker that has goals in line with what your goals are, the time that you spend in the market will be difficult. Plan your Forex trading against a realistic schedule and analyze the markets appropriately. If you can commit to checking currency prices on an hourly basis, then you can plan to buy and sell within the same day. There are also Forex trading options that allow you to buy and sell based on weekly price fluctuations, which can work better if you have less time available to check currency prices. The best Forex trading methods are also the simplest. A more complicated trading method is not more likely to be successful than a simple one. All a complicated trading method will do is confuse you, leading you to mistrust your plan, overextend your account and eventually suffer major losses of capital. Deciding to use software or Forex automated trading systems does not mean you will have instant success on the Forex market. Trading skills and money management skills are still desirable when trading on the Forex market. Learning from experience and patience can eventually lead you to the path of becoming a highly successful Forex market trader. A wonderful tip for trading Forex is to start with small amounts and low leverage. Some people think that a bigger account will bring your bigger profits, but that is simply not the case. With these large accounts, a lot of people end up putting up a lot of money and don't see the return they are expecting. Keep track of your trading profits after a set amount of time. Do not judge how you did based upon single trades or you won't gather any useful information. Instead, opt to do an analysis of your strategy after a set amount of time. This can be a day, week, month. High rewards for minimal risk are what every Forex trader is looking for. Be wary of fraud companies and scam artists that prey on this desire, though. There are limits to the possibilities in Forex, and no trader can generate profits without taking risks. Once a new trader gets a feel for the market, he or she will have a better nose for the too good to be true scams. One important thing to note with regards to Forex trading is to define your risk tolerance carefully. In order to find out what kind of trader you are, you must realize what degrees of risks you are comfortable with, and stay away from any trading that may exceed those risk limits. A great tip to avoid risking too much of your money is to grow your account through organic gains rather than continuously adding deposits. It may be tempting to increase the size of your portfolio by depositing more money into your account to make trades, but you are actually just increasing the risk instead of the profits. Keeping track of the market trends is one thing, but you should also pay attention to buying and selling trends from other traders. Their perception of the market will influence their decisions, and also influence the value of a currency. A currency might have a high value only because there is a high demand for it. Understand that Forex on a whole is quite stable. As a result, the Forex market cannot be completely ruined by a natural disaster. That means that if there is a natural disaster, you can stay calm and hold on to your trades. While large-scale events do influence the Forex markets, you may not have to take any action if the countries whose currencies you are trading are not affected. Remove the emotions from your trading. Practice becoming more objective when it comes to Forex trading. Emotions such as greed, anger, and the need to get revenge for your losses have been the undoing of many a trader. The key to making Forex profits is a good strategy that you apply methodically, without emotion. If you are interested in automatic trading signals, do your research to find the market that suits your needs. When looking for one with an automated signal, make sure that the market actually has reliable signals. They should also have a good track record that proves that they are reliable and ethical. In conclusion, it can be trying to listen to so-called experts give you their opinion on Forex. The tips and tricks in this video have been widely proven, time and time again. Hopefully, this video will help to either clear up what you were unsure about or give you some new information. Let me know in the comment section whether you are going to apply some of these strategies. I would appreciate it if you subscribe to the channel so you could get a notification every time we upload a new video. If you would like to know more on this subject, there is a link below this video where you can learn more. Smash the like button and subscribe.